The 10-year yield, a little bit lower today. Second day of the federal government's partial shutdown. So let's figure out what the bond market cares about and head to Chicago. Rick Santelli kind of following the news and the movement in bonds. Rick.
Yes, Brian, and it is indeed day two. Yesterday, we did have a data point because it wasn't related to the government in terms of its release, ADP, and that's important. If you look at a two-day chart of 2s and 10s, you can see the ADP move. The last real data point, and it was about what many investors and the Fed seem to care about most, trying to measure the health of the labor market. And you see the drop there, and we've pretty much sustained that drop, meaning we haven't recouped it. We're hovering at the lower end of the range. But two-year yields are actually a little bit higher. You see the difference in the lines there. 10 years a little bit lower. Brian called it. We're down a bit, so the curve's flattening. But I find that really interesting because yesterday it steepened because weak labor implies potentially a more aggressive Fed easing. But today we see two-year yields are up a little bit, and Fed fund futures for the October meeting went from 101% to 95%. Now, granted, we're splitting hairs. It's fully priced in. But I find it interesting that we're losing a little of that intensity that we had on that weak ADP jobs report. If you look at a 10-year, today's very important because the lowest yield close we've had since the Fed eased on the 17th is 4.09. We could challenge that today. There you see the low yield close of the year was virtually 4% in early April, and that's also very significant. It has technical significance. A close below that level will bring in more buying, pushing yields lower from a technical vantage point. And finally, the dollar index. So the curve's flattening, but the dollar's firming. Here's a two-day of the dollar. It doesn't look anything like the yield charts. It continues to do a bit better. We made our low close of the year, as you see there, right around mid-September. And now it looks as though we're going to continue to move a bit higher. Anything above 99 would be considered a very important close technically. We're not quite there yet. Brian, back to you.